With MailChimp, you get a whole lot more than a URL. You get an all-in-one marketing platform to help drive sales. That means you can connect your data to make more informed, smarter decisions, and you get powerful automation tools like our Customer Journey Builder to ensure you never miss an opportunity to turn shoppers into loyal customers. So if you're ready to integrate your marketing and boost sales, get started today at MailChimp.com/smartmarketing. MailChimp, built for growing businesses.
The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the podcast on Monday, the 29th of March, 2021. On the podcast today, John Clark, CEO of Gfinity, discusses their interim results, which saw revenue increase by 212%. Plus, they signed an esports agreement with Manchester United. Also on the podcast, Kieran Mazaria, CEO of Cadence Minerals, talks about the significance of the inaugural shipment of iron ore from the Amapa iron ore project in Brazil. Also, Craig Martin, chairman of Dynam Capital, the investment manager of Vietnam Holding, discusses their interim results where their net asset value per share rose by 38.7%. And Russ Mould, investment director at stockbroker AJ Bell, talks about the small cap markets and the contagion effects of a hedge fund going bust. Also, at the end of the podcast, I have two lists for you. The top 5 most followed companies on Vox Markets in the last 24 hours and the top 5 most read RNSs. You can check out both these lists at voxmarkets.co.uk, where you'll also see lots of other content there. Check out Dev Clever article there. There's one on Cadence. There's one on 88 Energy. There's also one on Gfinity. Plenty of others there. And of course, I always like to check out a COVID-19 index, see what's up and see what's down. Biggest rise of the day is Hemogenics Pharmaceuticals, up 19% to 7.5. Biggest fall again, Gene Drive. It's having a bit of a hammer in there. Down 11 or 12% to 62 pence there. Check that out at voxmarkets.co.uk.
Vox Markets is an online community of investors that runs a free mobile and desktop platform that allows you to track news and updates about any UK-listed company, offering RNS push notifications, detailed charts, pricing data, and much more. Find out more at voxmarkets.co.uk/app.
And joining me on the podcast right now is John Clark, CEO of Gfinity, GFIN is ticker. John, thanks for joining me.
Always good to be here.
Yeah, and you've announced your interims out and also conclusion of the formal sale process, strategic review, half-year results, of course, and looking very positive. And if anyone's listening, maybe is not quite familiar with Gfinity, I've maybe heard of that. Just to explain what you do, John, because, I mean, you set out your stall when you came on board as CEO and you broke it down into 3 areas of core operating. So explain, if you could, Gfinity.
Yeah, so Gfinity is sort of a leading esports solutions provider and really becoming even more of a digital media business. So we've got 3 strategic pillars that we operate against. The first is things that we own, which is the Gfinity Digital Media Group, which is our web and social channels. The second is what we co-partnerships that we create events and activities for our partners, that we also share the commercial upside of what we create, and that's what we do with Abu Dhabi Motorsport Management, with the V10R League and the Global Racing Series that we created with them, paid for our services, and then get a share of the commercial, the 50-50 share of the commercial revenues that are generated. And then we build communities for others, is work that we do for people like Formula One, Premier League, Activision, Red Bull, etc. And in this area, what's really important is that we utilize our technology, IP, our tournament platform, to help them grow the gamer audiences that they're looking to reach and deepen their engagement with. So we have 3 strategic pillars, and we're very focused on delivering against each one.
Yeah. Well, let's look at the results. Your results up to the 31st of December, and of course, these financial results, even though you can see clear signs of excellent improvement there. Of course, they're historical. We're almost 3 months, they're old at least. So, first of all, let's go into what's driving the improvement, John.
Yeah, the financial picture of the business is improving. So we saw in those results, the revenue's up 200% compared to the 6 months prior to June 30th, 2020. The adjusted operating loss is down 71% during the same period. And so big thank you from me to the team and our clients and partners that help making sure that we can deliver these results in what is very turbulent and challenging time for all businesses. But yeah, we made significant reductions to our cost base, put in place that clear strategic plan that we're delivering against. Our focus is really on higher value revenue and margin streams. So we now the good point to make here is we now have a better quality of recurring revenues through our owned audience, which was the Gfinity Digital Media Group, and through the licensing of our technology, which is primarily our tournament platform. So this is where we're putting greater emphasis on things that we own, and we're monetizing that better. And this is what's driving and accelerating the positive performance of the business.
Yeah. And actually, we've gone through very hard times there, COVID, and a lot of companies pull back or stop investing. So I assume it's going to get better. But is this, financial performance sustainable, John?
Yeah. What we now have is a solid foundation in place. In the final quarter of 2020 calendar year, October to December. So on an adjusted EBITDA basis, Gfinity was profitable, and that's for the first time in the company's history. So it shows that the strategy is working. It shows that when we put a greater focus on what we own and sweat those assets as well as hard as we can, then we can deliver good results. We are early in our transformation journey. But the reality is we still experience seasonality headwinds. And it's also, we don't underestimate the impact of the lockdown on spend and confidence of brands, sports rights holders, etc., on investing. But that's the reality that everyone's having to deal with. I think so. What's important to stress about our business today versus in the past is we've got a better quality of recurring revenues through our owned audience and licensing of our tech. Both are at an early stage of maturity, and as we scale, they're going to grow at a quicker pace. Licensing our technology platform's got a massive commercial upside for us. It's in essence a SaaS business providing annuity revenue stream at scale. So this is really key for us. That when you combine that and the GDM, that's what's going to fuel the accelerated growth of the company going forward.
Yeah. And do you have, like you say, you hit month-on-month profitability a while back, but do you have a target for the continued month-on-month profitability?
Yeah, so as I mentioned, in the final quarter of 2020 calendar year, Gfinity was profitable. I have to say that was sooner than we anticipated. Our business is still not linear. There's still seasonality in the model that gets flushed through. The lockdown also had an impact on client spend and the time it takes to close deals. So it's difficult to give a specific date during the year when it will start profitability month on month. But what I can say and will say is that the business is on a very solid financial footing. We're well capitalized, and there are a number of exciting big initiatives ahead of us that are going to accelerate our growth.
Yeah. I suppose worth pointing that out there about, companies, even though lockdown, because gaming benefits from this, there are companies obviously involved that will hold back spend, I suppose, because they're locked down and they won't invest. So there's two parts to that, isn't there, I suppose? But cash position is positive here. What has driven this, and does it mean you do not need to raise money going forward?
Our cash position is now strong. This is due to two reasons. Firstly, the significantly improved financial performance of the business. And secondly, it's coupled with the exercise of warrants. There's been a sort of, on one level, has been an overhang on our stock since the start of for the last 12 months. During that period, there was 0.6 million were exercised. We expect all those remaining warrants to be exercised prior to the expiry date of October this year. This is going to leave us very well capitalized into 2022. So our challenge, like any small startup business, and we are a small startup business in many regards, is the funding of transformational growth. But this is a good challenge to face, especially when we look at the multiple opportunities that are ahead of us. So we're going to spend the next 6 months continue to improve the financial performance of the business, win more commercial deals, add some additional great talent to the team with experience that we need, and invest in those transformational growth opportunities.
Yeah. Well, your digital media business there is key to your success there. What's driving the growth there, John?
Yeah, it's good. It's good to call that out. In the Q4 calendar year, really shone a spotlight for us on what's possible with GDM. We remain on target for the anticipated revenues in the region of 2 million and monthly users in excess of 15 million that we've set ourselves. But our ambition doesn't stop there. Our ambition is to get to 100 million users within 3 years, driving revenues closer to 20 million, and the beauty of that with margins in the range of the 65% range. So we've now got live examples of how we scaled GDM this year and beyond. So just to give you a few examples there, we launched racinggames.gg in November, and that's now tracking to have 500,000 monthly users as we get into the fourth quarter of this year. We acquired Epic Stream in December, and within 2 months, the monthly users went from 600,000 to over 1.2 million. And as a result of applying the skills that we have to an existing property that we acquired. And then we launched the Magic the Gathering MTG Rocks this quarter, and that generated over 100,000 users in the first month. So what's important to keep in mind that each of these sites will now start to be monetized as we go into the next quarter. The first period of time is building up the credibility, building up the numbers. Once you get those, you start getting ranked on Google, which allows you then to sort of start to get the monetary opportunities that brings. So that's what's happening in the next quarter. So we also entered into a partnership with Map Genie. It is an organisation where we embed the maps that they create into our articles that we write, that drives up the dwell time, excuse me, and also drives up users to the Map Genie site. So we see a lot of opportunity in the tools that help the experience of the gamer when they come to our sites to grow as well. So we've got tournament play coming to Gfinity Esports as well, which is going to be big for us. So GDM is what we realise is a part of a business that others want to tap into and access as well. So that's very, very positive going forward.
Yeah, well, do you know what? I noticed today, I just tweeted out, I mean, the brands who've worked with you, phenomenal, it doesn't get better. You've got Formula One, Cadbury, E-Premier League, Red Bull, McLaren, Activision, and now I noticed in the announcement today, you're working with the biggest, most famous football side in the world, and that's Man United. Can you share some details on this, John?
Yeah, that's I can't actually share anything more about this project than what's in the RNS. But what I can say it's new and exciting. Just started working with them. It's great to have the biggest names in sport like Man U, as you said, Formula One, Premier League, to choose to work with us. So this is going to be an exciting project, and look forward to sharing more about that in the future.
Yeah, well, I suppose winning new clients it's not that much of a challenge when you've got that roster of brands behind you already. It must help a lot, doesn't it?
Oh, definitely. As a big West Ham supporter, then obviously that would be the next one that I'd love to bring on board. But I don't think even I, with hand on heart, can say it doesn't compare when it comes to size and scale of someone like Manchester United, the Premier League, Formula One, etc. So yeah, it really helps that people see. The people just don't give you that work. You've got to go out there and you've got to prove yourself worthy. You've got to invariably you have to you're in competitive situations to win, and it's great when those brands choose to work with us.
Yeah. Let's talk about the FSP formal sales process. I know,
Yes.
With a lot of people, it's had a bit of, it's cast a bit of a shadow, a bit of doubt. They don't know what's going on there, uncertainty. But you've concluded by saying you'll continue with the strategy that you already had in place. So why do you do the formal sales process? Because some people are still not, clear on that.
No, I think it's a good question to ask. I think it's good to start from. For us was a guiding principle in this process, which was whatever we were going to do, it's all about maximising shareholder value. So the FSP was important because it allowed us to have a range of conversations where any subject could be discussed, and it gave us, it really gave us certain regulatory dispensations. But what it was really has done, it was an opportunity for us to put ourselves in front of a host of different businesses around the world and talk about what the company is today and what we do today, rather than what we were and what we used to be. So in some ways, it's a great opportunity to reposition the company. So that was important. So, that level of understanding now of who we are and what we do and the depth of areas has been clearly articulated. And personally, spent a lot of time doing that, and it was very valuable to do. So it's clearer than ever to me and the team that what different organizations see valuable in what we do. And I categorize it in three areas. Firstly, which I just mentioned, the Gfinity Digital Media Group. The fact that it's one of the fastest growing media groups focused on gamer lifestyles in the world has flicked a switch for many people about what we are now and how they can work with us. So that's good. Our tech IP, in particular, the tournament platform, which is world leading in terms of what it can deliver and how it operates. Again, we see people wanting to sort of learn more about that and find ways to use that. We own it, and that is very valuable. And our content creation capability, it's what we're able to create from scratch, like the V10R League with Abu Dhabi Motorsport management. So those three areas are really what people see where the most pertinent value to their businesses come from within Gfinity. So that process already resulted in one significant commercial partnership, which was the 3-year deal we announced recently with Iconic, which is worth close to £1 million a year, and we expect to be a lot more like that during this year. So we're really focused on accelerating the growth of the company, and the FSPs helped us do this.
Yeah, okay, John. I know you couldn't do these 3 reasons previously when you're on the FSP, but it'd be nice to do it now if you could. If you can think of 3 reasons why, if someone's listening right now and they're thinking, okay, Gfinity sounds very good, it's improving, give us 3 reasons if you could why someone should hit that follow button on your page of Vox Marketing, add Gfinity to their watch list, please.
Okay, firstly, I would say strong and improving financial performance. Secondly, a very easy to understand strategic direction, what we own, what we co-own, and building communities for others, utilising our tech IP, and the wonderful roster of brands, sports rights holders, sports clubs that are choosing to work with Gfinity time and time again.
Marvellous stuff, John. Good to chat to you, and hopefully we'll be catching up in the not too distant future. Thanks very much.
Brilliant. Thanks for your time.
The Vox Markets Podcast with Justin Waite.
And joining me on the podcast right now is Kieran Mazaria, CEO of Cadence Minerals, and that's KDNC ticker. Kieran, thanks for joining me.
Pleasure as always, Justin.
Yes, big day. End of the first quarter here. Inaugural shipment of iron ore from a Mapa iron ore project in Brazil. So we'll talk about that because, of course, that's the big project, I suppose. But you've got lots of other things going on. So just explain quickly for people not familiar, Cadence, if you could.
Yeah, absolutely. So Cadence is an investment company. We have investments across iron ore and lithium and rare earth minerals. So both in joint ventures, and we have a very large public stake in EMH, European Metals Holdings. So we're an investment company focusing on commodities, primarily on iron ore and sort of, let's call it the electric revolution, those commodities or chemicals that will fuel that electric revolution.
Yeah. Okay, well, let's talk about this first shipment. How big is it? How significant is it? Tell us more about it if you could.
Absolutely. Well, it's hugely significant for Dev and for Cadence because one of the things that has been it's important. We're bringing this asset, the Mapa iron ore project, as an integrated port, railway and mine out of restructuring. So effectively a Chapter 11 or Chapter 15 equivalent in America. Mm-hmm. So we're bringing it out. And one of the things that's critical for us to get done was we got a court order so that we can start shipping material. And that shipping of that material allows us to start investing in the project and pay some small creditors and employees about $2.5 million. So, there's been a toing and froing through courts and all the rest of it. But in February the 19th, we got final approval to do it. And we acted as quickly as we feasibly could in a safe manner. And it's really great to see that the ship is currently loading 45,000 tons of iron ore. Current iron ore prices, CFR, that's delivered to China, is around $160 per ton. So that's going to be a substantial part of revenue for Dev. and that then can go into the project, and in addition to that, pay the small historic creditors. And really, this is a pivotal moment for this project to get it up and running again.
Yeah, absolutely. And so what's next year? And how many, so it's 45,000 tonnes then, so how many tonnes have you got there, and what's next there then? Good.
Well, so in total at the stockpile, there's about 1.39 million tonnes of iron ore of various grades, all the way from 65 to 59%. So this 45,000 tonnes is effectively to net 10 million. Well, there'll be several shipments that will net 10 million for that court order. By the time, we certainly hope that we're gone through that, we would have reached a settlement agreement with the secured creditors, and then Cadence will vest its 20% into the asset. And so really that's the next step. As I said in the announcement, we're still going through the sort of the final stages of this settlement agreement. We had an agreement in principle in September last year. It's taken some time, but nonetheless, I think the banks and ourselves and Dev and Indosino are all aligned now to get the settlement agreement completed and executed. And once that happens, then we've got our 20%, and really that then is finished stage one of our redevelopment program of the asset. And that stage one is, get ownership, start shipping. Stage two, carry out the studies so that we can get to a point where it's a bankable or equivalent of a bankable feasibility set of studies to then invest capital. There's going to be capital from the stockpile, which will be get invested into the asset. We'll get some project debt and some equity, and that then brings it to full-time production. So what the idea is it's a great little asset, because ultimately, well, not little, it's a very large asset. It's a great asset because from now, if all goes well, it's profitable, right? Because it is shipping material, it is generating profit from that material, and then it will be capital investments to go into full-time production from the mine, which has got a 12-year mine life. So this is a start of a wonderful journey now for Mappa, for the people of Mappa socially, and for Cadence as a shareholder once we get there.
Yeah, I was going to say, if you go back, say, maybe 12 months and look where you are now, you'd be quite impressed with the progress you've made, wouldn't you?
Yeah, I think it's been, yes, I am impressed that we've been able to go through this. I think maybe I thought it was going to happen quicker. I think earlier on I was sort of making forecasts of it occurring sooner. But of course, this is a legal process and it's a negotiation with secured creditors, and that's just taken longer than expected. But nonetheless, we're now here and we can move forward. And now I really believe in a really strong outlook for this project.
Marvellous stuff. Okay, well, let's have those three reasons, Kieran. If someone's listening right now, likes the sound of the progress you're making here, but are not yet following the story, give them three quick reasons why they should hit that follow button on your page and add you to their watch list, please.
Yes, absolutely. The first reason is just what we've talked about, the Mappa Iron Ore project. This is a pivotal project for Cadence, and we believe will deliver excellent shareholder value over the coming years as this project goes from where it is now, which is sort of pre-production, shipment, and then all the way to production. We also have a wide variety of other investments which cover the lithium space and the new energy electric vehicles. And that is really a positive sign given the adoption of electric vehicles. And we've got our fingers in several pies there, including European Metals Holdings. We have a JV stake in Bacanora Minerals, and we also have a JV stake in Hastings Technology Minerals. All three of those are in the sector of effectively electrification of vehicular transport.
Extra stuff, and there's nothing hotter than that at the moment. Cool stuff, Kieran. Thanks for chatting to us, and hopefully we'll catch up in the not too distant future. Thanks very much.
Thank you very much, Justin.
The Vox Markets Podcast with Justin Waite.
And joining me on the podcast right now is Craig Martin, Chairman of Dynam Capital, which is the investment manager for Vietnam Holding. VNH is a ticker there. Craig, thanks for joining me.
My pleasure. Very good morning to you.
Yeah, absolutely. And you've got your interim results out. And just quickly, Craig, before we get into that and talk about those, for people, I mean, it's sort of self-explanatory, but Vietnam Holding, just explain what it's about, please.
Sure. So Vietnam Holding, VNH.L, is listed on the main board of the London Stock Exchange. It's a closed-end investment trust, and all its assets, about $150 million worth, are invested in Vietnam equities. So that's all that Vietnam Holding is. Very simple structure, easy to buy, and to give people access to the exciting story of Vietnam.
Excellent stuff. Okay. So your interim's out today, covering the period of the 31st of December, and the numbers looking good. Can you give us a few summary highlights of that, please, Craig?
Sure, yeah. So this is the first 6 months from 1st of July to 31st December 2020. I suppose the key highlights is that the net asset value, the fund's net asset value per share in that period was up over 38%, about 38.7%. And also during that period, the share price was up about 24.7%. So hasn't quite caught up with a high level of growth in the net asset value per share, but it is getting there, and it's certainly gone up a lot in that period. Fund a concentrated portfolio as at year-end, or December 31st, it was about 25 positions, and our top 10 positions account for about 63% of the fund's net asset value. And I think the other thing that's continued to improve during the first 6 months of the financial year is the fund's liquidity. The daily trading of the shares has improved markedly. So I think that's good news for shareholders. So it's a very strong first 6 months of the financial year for Vietnam Holding.
Yeah, absolutely. Now, you've got a section in the report called "A Force for Good," and that's impact and ESG, and it's everywhere at the moment. And is this the case for Vietnam? I mean, in emerging markets, is it as relevant?
Look, it's a great question. I mean, I think now ESG does certainly seem to be very much mainstream. It's great for us to hear that. We were a very early adopter. We were a signatory of the United Nations Principles for Responsible Investing well over a decade ago, and had very early conversations in Vietnam with people about ESG and impact. And initially, in the early days, no one really understood what it was we were going on about. It took a lot of time and education. But now, globally, I think we're at a tipping point for ESG. I was just reading today, I think almost $750 billion are now kind of allocated towards impact strategies. And I think it is increasingly relevant for every market. It is mainstream. For us, at Dynam, as the investment manager for Vietnam Holding, we kind of also want to take it up a notch. So we're looking at ways to do more with our portfolio companies on all of the dimensions of ESG, to report more, and obviously within that is also to measure more. So we're looking at the ESG dimensions as we already do. This year we've been looking a little bit at the carbon footprint of our portfolio, and it's still a work in progress. But I think we're coming up with some good numbers that our portfolios, got 40-50% less kind of carbon impact than if you just bought an ETF for Vietnam. But we're also looking at the SDGs. These are the Sustainable Development Goals. It's 17 goals that the UN set out, and we're seeing how we can, map some of our portfolio activities towards that. But I think the whole area is really going to become much more mainstream, and even more so this year in the UK. I think in Glasgow in October, something called COP26, a big kind of climate conference. And so I think the world's attention, rightly so, are going to be looking more at ESG and impact, and we're there alongside investors as they want to perhaps do more on those dimensions. So yes, I think it is very much relevant to what we do at Vietnam Holding.
Yeah, absolutely. And we last spoke a few weeks back, and now we're at the end of Q1. How has it been there, Q1 for Vietnam?
Well, time flies very quickly, doesn't it? Look, I think the quarter, the calendar year for Vietnam started out strongly. The GDP is probably about 4.5% year on year. The full-year target for Vietnam is somewhere between 6 to 7%, which will be a great number. Bearing in mind, Vietnam was also one of the strongest growth markets in the world last year, with just under 3% GDP growth. The thing we look at is also the level of foreign direct investment, which is probably about $4 billion in the first quarter. And that's also up more than almost 18% on last year. in terms of committed amounts of investment. Disbursed amounts of investments, probably about 6.5%. And within that, I think it's really interesting to see that electronic equipment manufacturing is leading the way. It's probably up about 10% year on year. So all the good things we perhaps looked at last year of manufacturers looking to relocate to Vietnam to take advantage of its competitive position, its comparative advantages, perhaps in the light of, trade tightenings between, say, the US and China, Vietnam doing well. So we're seeing those numbers come through. And although there's a little bit of inflation coming into the economy, nothing at alarming levels at this stage, but the economy seems on track for a very good 2021 indeed. So Q1 almost finished, and I think it's a good score for Vietnam for Q1.
Yeah, absolutely marvellous stuff. Okay, as always, Craig, then 3 reasons why someone who's listened to this, who likes the sound of the progress but not yet following the story, give them those 3 reasons why they should hit that follow button on your page and add Vietnam Holding to their watch list, please.
Well, look, I think the first one is diversification. Vietnam is a good diversification market, and the year started strongly with good prospects for the full year. So for investors looking to diversify their portfolio, that free lunch of finance, that's the first reason. I think the second reason is the NAV is up strongly in our portfolio. We're probably up about 50% since the beginning of the financial year. That's the 1st of July last year. And yet, and the third reason is value. The fund trades on the London Stock Exchange, and you can buy it actually at a discount to its net asset value. So you're getting a pound of value for about 82p. So I would say they're the 3 good reasons: diversification, strong net asset value performance, and thirdly, Vietnam Holding. You can buy it at a discount to its net asset value. So a good opportunity for people looking at this very interesting growth market.
Absolutely. Marvellous stuff. Craig, it's good to chat to you as always, and hopefully we'll catch up in the not too distant future. Thank you very much.
Looking forward to it. Thanks ever so much for your time.
The Vox Markets Podcast with Justin Waite.
And joining me on the podcast right now is Russ Mould, Investment Director at stockbroker AJ Bell. You all right, Russ?
I'm very well, Justin. How are you?
Yeah, I'm all good, thanks.
Good.
Nice weekend. And I feel like generally we're now heading towards this opening up, slowly, as long as something doesn't go wrong with
Fingers
the figures
crossed.
or the data.
Yeah.
But it seems like we're going in the right direction. Do you know what? I was saying on social media, that on Twitter actually, that last Thursday there was a big sell-off, and pretty much all the stocks in my portfolio, which are small caps, sold off, and they're all red. And I thought, that very rarely happens. You normally have a couple of non-movers, hopefully a couple of rises in there, but they were all red. And I thought, it reminds me of a while back when, I can't remember the name of the fund, there's a UK listed, based small cap broker that went bust. And of course, they go bust, and there's a bit of contagion there. They're all sort of connected. And but and I remember looking at the indices last week. AIM was down 1.3%, and the rest of the indices were down 0.5% pretty much. So, yeah, and small caps at the moment, they seem a bit volatile. I don't know whether it's the end of the financial year or what's going on there,
Yeah, it's a really good point, because small caps have been on a massive run. I mean, I know we've talked a lot about the big cap indices are up 50, 60% from the low of last March, just over a year ago. But AIM's up nearly 100%. The Russell 2000 in America is up nearly 100%. So small caps have been leading the way, and normally that's a good sign. There are 2 ways of looking at it as an investor. One, small caps, they're more usually, not always, but normally less well developed. They're less well financed. They're more dependent upon a key product or service, a key executive. Or probably more normally their domestic market, because again they're not global concerns yet. So they're often a good proxy for local economic activity. So it's always nice to see the small caps doing well from that perspective. Yeah. And also because of those things we've just discussed, they're just riskier. So generally speaking, when small caps are, so they're a good risk appetite barometer. So when small caps are going up, we're generally in a bull market, and when small caps are going down very fast, the opposite applies. So it has been good to see small caps going absolutely gangbusters. The Russell was up by 1/5 at one stage this year at its peak in mid-February, but then last week, just like unfortunately your portfolio did, I mean, it gave up about 10% in 2 or 3 days. So that would suggest that the mood music's just changed, and actually AIM, the FTSE small cap, and the Russell are now basically no higher than they were late January, early February. So we've actually almost flatlined now for 2 months, which I think, again, comes back to this point of our vaccination program's going quite according to plan. Is travel going to be eased as quickly as, is the recovery going to be quite as quick as perhaps markets have priced in? Because, a year ago, when there was no optimism at all, well, markets have doubled since then. They've climbed the wall of worry. Now hopes are a lot higher. Is the danger that markets, slither down the slope of hope, which is the other half of that saying. So again, I think we've reached a slightly more difficult time now for markets. But if vaccinations keep on running, that will help, and we still have fiscal and monetary stimulus in the background. So you'd expect that to help as well. But certainly, small caps will be a very, very good guide as to what happens for the rest of the year, for absolutely certain.
Yeah. And I don't know if you saw that the fund in America going through as well. And sometimes the wobbles, the shockwaves from a fund going through, whether it's connected or not, can hit the markets, can't it?
Yeah, I'm not sure I'm pronouncing it properly. Is it Archegos? My Greek's not terribly good.
No idea.
But I think it's Archegos. It was run by a guy called Bill Hwang, who used to work for Julian Robertson at Tiger. Tiger was one of the first really big hedge funds in the US in the 90s. And actually, Julian Robertson, who set up Tiger, kind of packed it in when the tech media and technology bubble ran him over in 1998, 99, 2000. He said, well, I can't make any sense of this. And if I can't make any sense of it, I'm folding up my tent. And obviously, shortly after that, everything that he couldn't make sense of proved that it was nonsense because the market promptly collapsed. Yeah. So Julian was a pretty smart guy. This guy is a disciple of Julian's, and it looks as if he's been very heavily into Chinese internet stocks, and he's been very heavily into some US broadcast stocks, and he's been doing it on a very, very highly geared basis. I've seen some blogs and tweets saying that fund may have been 4 or 5 times geared, which is great when it works. But obviously, if the fund starts losing value, the shares start going down. You have to market every day. Your prime broker, which in this case looks to be Credit Suisse and Nomura, they will say, "I'm very sorry, sir or madam, we need you to put some extra money in because we want comfort that you can meet your liabilities." And clearly, when you're that geared and some of the share drops have been that high, he couldn't make up the money. So that fund's gone. So there was a fire sale of stock last week. The tipping point, I think, looks to have been the Chinese internet stocks, because you've had the Chinese authorities talking about, looking into, how they use customer data and do they have to give the data to the government, which is possible. And also you've got, the ongoing situation with Jack Ma's at Ant Financial, and it looks as if the Chinese authorities are taking a bit more of an active interest in those businesses, shall we say. And so that's meant that those have come off from very high valuations, and that the fund has clearly been caught off guard. So it's been having to not just sell those stocks, but basically the prime brokers have been selling anything they can lay their hands on to get their money back. And this is your point about interconnectedness. It's all very well me saying, well, I don't own Viacom, CBS, and I don't own Discovery or any Chinese internet stocks or whatever. But if that fund owns something else that it can sell and the prime brokers want their money back, then they will just sell it. And that's when you can get contagion. Now, we don't know whether this will have a lasting impact or not. Some market accidents just come and go, and they're just a ripple. Some of it, I remember we were joking about it just as we started talking. I remember when $3.5 billion was a lot of money, when long-term capital management went down in 1998, that caused a major ruction on the back of the Russian debt default, and the Fed actually had to step in and organise a bailout there to maintain orderly markets. But equally, some other market disasters have come and gone, and there's been barely a ripple. So, but we do need to be conscious of the fact. I think what this does tell you is there is a lot of debt out there, and if there's a lot of leverage in the system, the foundations aren't terribly strong. So I think that's the one concern, is that if we do get a sell-off, it probably will be magnified. Everybody will be left looking and saying, well, why did that happen so badly? And your explanation is there's a lot of margin in the system. Now, you can follow it from a retail perspective. In the US, we're going to the FINRA page, the regulator, and retail leverage has just crossed the $800 million mark for the first time. Now, on a market, on a GDP adjusted basis, it's not a huge number. Some people say, well, on a percentage of market cap basis, it's not excessive, but it is an all-time record high. We know what's been happening in GameStop. People have been were using when they're allowed to were using leverage and options to try and magnify their gains. And again, that works well when it works well, and when it works badly, it works terribly. And so that is when you can get market dislocations, because people are forced to sell to make margin calls and cover up the money that they've borrowed. And obviously, once you're underwater on a position, you've got losses, then you have to start selling other things. So I think what it is a useful flag to everybody out there that speculation is at its most dangerous when it looks easiest, and just to mind your eye. We've had a brilliant run. Just be a little, that I think it's fair to say the general tone is pretty bullish right now. So just, as Buffett says, be fearful when others are greedy, and greedy when others are fearful. At the moment, I think there's probably a bit more greed out there than there is fear. So just tread warily.
Yeah, I did a video on the weekend about that, and about discipline basically, but how we are not wired correctly when it comes to the stock market. You said, when the fear is the highest, and we know now, going back to the dash for cash in March 20, then we should have been buyers. Really is buying the fear, and you got to sell the sort of the bull really, and buy the bear. Absolutely, because. Those herd mentality is wrong. It's as an investor, you should be the other way. Because that's what Buffett has got down to a T, I think, isn't it?
But it's psychologically really hard to do.
Yeah,
You're
exactly.
effectively asking someone to run towards a burning building.
Yeah,
and it's just not what. It's just run towards the saber-toothed tiger, not away from it. Yeah, it's just not what wired to do.
No, exactly, and that's one of the things saying. You've got to sort of think of it logically in an illogical way, really. But when everyone's running towards the cliff, the guy running away from the cliff seems insane. But you realize, hang on, he's the guy maybe we should be following. So
there you are.
Yeah, marvelous stuff, Russ. Thanks for that.
Pleasure.
Okay, it's time for the top 5 most followed companies on Vox Markets in the last 24 hours. They are at 5, Escapant. Interesting there, no news out, but it's been followed. At 4, it is 88 Energy. At 3, Destiny's Pharma. At 2, Critical Metals. At 1, Gfinity. Oh, hang on. It says Dynamic here. Is also Ratio Mining at 2 now. Gfinity at 1. So check that out at voxmarket.co.uk. And also, let's have a check here at the most read RNSs. There's follows. At 5, Gfinity, conclusion of strategic review. At 4, 88 Energy, operations update. At 3, Hemogenics, allotment of shares. At 2, Gritland Gold, notice of general meeting. And at 1, Tiziana Life Sciences, chairman of Tiziana, to give interview on Bloomberg. Okay, he's done that quite a lot, hasn't he? That's it for the podcast. Thanks for listening. Muchos appreciated.
The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
With MailChimp, you get a whole lot more than a URL. You get an all-in-one marketing platform to help drive sales. That means you can connect your data to make more informed, smarter decisions, and you get powerful automation tools like our Customer Journey Builder to ensure you never miss an opportunity to turn shoppers into loyal customers. So if you're ready to integrate your marketing and boost sales, get started today at MailChimp.com/smartmarketing. MailChimp, built for growing businesses.
Streaming only on Peacock, Ghislaine Maxwell had it all until she met Jeffrey Epstein.
Ghislaine Maxwell's charged with enticement of minors, sex trafficking of children, and perjury.
Epstein's Shadow, Ghislaine Maxwell. Streaming now, only on Peacock.